Hello, everybody. Welcome again. It's been a crazy week as we continue on with the end of the year. Um, FOMC meeting was now over with, and we have one more day, trading day, left in the week. I hope all you guys are staying safe. I know yesterday and today took me by surprise. Surprise is never a good thing, but we just gotta make what we can, make what we can out of what the market gives us. So I hope you all are staying safe and still trading profitably. Let's give it a few moments to see who joins us tonight. Hope everybody is excited for the holiday. I think next week I will be going on vacation, so I hope everybody's going on vacation too, or doing something special next week because we're going into the week of Christmas. I'm gonna be down in Florida, so I'll try and see if I can do some trading. If not, I have my long-term positions that will basically just be doing this thing, and even when I'm on vacation, so I'm not too worried. All right, 2 minutes in. Let's start. And whoever joins us can join us later. So let's start like how we always do. Let's take a look at the heat map. So heat map of the day, we can see that information technology sector really hurting. Same with communication services, consumer discretionary, right? So you have your things like Amazon, Apple, Microsoft, Google, Tesla, Nvidia, right? Qualcomm, AMD, AMAT, all this is hurting today. But if you're not in tech or anything, I don't think it's anything to be worried about. You can see this, even though these are the big sectors that are hurting, right? We still have a lot of green sectors, right? You can see healthcare, what's good today, financial, consumer staples, real estate, utilities, materials, energy, and even some of the payment processes here, right? Payment processors are green today. So definitely a good thing. So it's not really a sign of a crash or anything. If anything, just part of rotation now of technology, information technology, uh, communication services, consumer discretionary, because these were the sectors, earlier on in the year, it was quite the opposite of this heat map. We have many times where the heat map looked exactly opposite, where we saw all this was green and all of this right here was red. So now it's just a reverse. Right? So money is flowing from here to here. That's basically all we're saying. I don't think it's anything to be concerned about. Um, it is probably concerning to you guys if you are playing in these stocks. For sure these are the bigger part of SPY. So when they do go down, we do see SPY head down. So just going and looking at SPY, right? We're right in this range where, and I said we're probably going to be bouncing in between here. So uh, we still see price in here in between 740, no, 470 and 460, right? Around there. You can see today basically almost got rid of everything that happened yesterday. Yesterday was big old candles again too. Um, so if you were playing off the daily, like how I was saying, play it by taking a position here, right? Right at the 50 and then setting a stop below the 50, you probably still would be in. Uh, but since this is the daily chart, that's probably going to be a trade that's going to be a few weeks out. It's not going to be something that's going to be overnight. But we're still bouncing in between this range, and with only about 2 weeks left in the year. Yeah, 2 weeks left in the year. I don't think we're gonna make it any higher. It might take a miracle for us to go to 480, but we're ending the year close to pretty much what I predicted, right around 470. Um, so we're right on that. With the structure of the market still looks pretty good. Still following what we've seen early in the year. So I don't know if you guys are noticing that also, but you see the in the year we see it trending off the 50. A few times where we poke below the 50, but it still stayed relatively above the 50. And right now we're still seeing that. Now, if we do dive down into the hourly chart, we see what we see might concern us because it makes it so that it's very hard to swing, right? Or swing comfortably, right? When you're swing trading because you're having this whipsaw of it going back, up and down, and it's not trending nicely like we're used to back here, right? So we're having this whipsaw, and so this is the range that we were I on the very good time frame, right around here. So about 460, but here is probably better, right? And then 470. So it's bouncing in between here. And we can see that bounce quite a bit. It was a time where it did break below, but bounced right back up from 455. So I think what we're probably gonna want to see tomorrow is we're gonna see if this 200 holds, right? That's we're in a period of time where the market isn't really trending up. It's really not really trending down yet. So it's just a lot of indecision, right? And a lot of indecision like this, we see a lot of whipsaw, right? So what we've seen in the last 2, 3 weeks, the market's just not picking any direction that it wants to go. It's going, you see it $10 up one day, $10 down the next, and it's just coming back and forth, right? And as I mentioned, Wednesday was FOMC. We could see that, right? The result of that. All of this within the last 2 hours of the market, right? Right when the FOMC meeting started, and then the market shot up, and then today we sort of just gave that back. So we're still playing in there. Um, Probably mostly due to the FOMC meeting not really clarifying anything, right? Well, they haven't told us anything new that we were not expecting. Everything that the information they basically gave us is what we've been told before. We knew that was the case, and there really wasn't a change, right? So I don't think for the market, bad news and good news are good things. Indecision, unsure news is a bad thing because we don't like indecision. We don't like not knowing where the market could be going. When that happens, we see this whipsaw action. See that. Um, so I would be paying close attention to see what the market likes to do or what it wants to do as we see here, right? Because we're right at the 200 an hourly. And so we could be trending down again, or this could just be a shakeup, and to tomorrow we could see it bounce up higher. Right? I would totally want to see it go up higher, but that's it. Right? This is the daily. Daily looks good. The weekly. Now, one thing as we get closer to the end of the year, I want us to reflect on the price action of SPY and see if this behavior is normal or if it's something that we should be concerned about, right? So this year, this part right here, 2020 is here, and then looking back through the year, right? So we are increasing at a much sharper rate. Probably, you know, last year and this year, record rate of returns. But I'm expecting that maybe as we continue going, we're going to start to slow down. And this is the structure that I kind of want to see. More sustainable growth, right? So you can see how sharp the last 2 years in reference to the last 10 or so years. Yeah, right? So this is the crash of 2008, 2009, maybe before that, right? Nice 45 degrees climb. Here we just go straight up. So if anything, you know, if next year turns out to be a bad year, you might just see, instead of seeing this climb at a steady rate, we might see it, fall back a little bit. Just maybe range bound. And the range boundness could probably last all of next year into 20, and into the beginning of 2023 before we make a new high. Now, no, that's just one possibility for 2020, 2022, and going into 2023. Right? So for sure, I don't see this sharp of a growth to be something that's sustainable for the long term. Um, so I want to see I want to see it make more of a pattern like this from a few years ago. Right? Looking at the looking at the monthly, we see that even more. The last 2 years here, see how sharp it is in comparison to how SPY has been going since 2009, right? Anything that's so sharp like that, we climbs really sharply to the upside, it dies heavily, right? Something like this, right? And this is just noticing what has happened in the past. Oh, I'm open for questions. Feel free to ask away. Um, as I'm doing this for all of you guys, so the more questions, the better. Feel free to. I can always step away from these charts and look at something that you want to look at, or answer a question that you want. So feel free to ask as many questions as you want. This is a time for you guys. It's a time that I set every Tuesdays and Thursdays for you guys to ask me questions or just pick my brain. So feel free, go for it. I hope that you get, by asking questions, you guys learn. Oh, no problem. I'm just looking at SPY. So SPY is a stock that is, well, it's a stock. It's an ETF, right? A ETF is it's a exchange traded fund. And what SPY is it behaves like a stock, but the only difference is SPY is different, as in it's a holding of 500 individual stocks, right? So when you buy one share of SPY, what you basically get is you get a piece of 500 companies, right? Because SPY, which it's an ETF that tracks the S&P 500, and the S&P 500 is an index. Okay, so and we can jump to see, right, fundamentals, and these are all the holdings of SPY, right? So instead of buying individual stocks, when you buy SPY, one share SPY, you basically get a little piece of all these companies. There's 500 of them. So you get stuff like Apple, Microsoft, Amazon, Google, Facebook, Tesla, Nvidia, so on and so forth. It keeps going. There's 500 of it. So if you're still new, and you haven't established you have established understanding for stocks, and you're still learning it, and but you still want your money to grow somewhere. You can always buy SPY, and when you are ready, you're done with your homework and everything, and you are ready to buy individual stock or individual companies, then you can take your money out of SPY and do just invest in individual companies. What SPY is gives you basically a big basket of 500 of the best stocks in the US market. So that's why I always open with SPY, right? So usually when the SPY is up, the whole market is up. So that's why we look at it. Yeah. And so you say you're new to the market, welcome. I hope you're learning. Feel free to ask any questions you want. For sure, keep studying. The don't be. I know everybody who starts, they're so eager to make money and everything, but take that as like second seat, right? First, try to learn as much as you can. We have a group here, and we have a group over at Moan Investor Community. Feel free to ask questions in there. I did post a link to our Discord um, in the description. So feel free to come to the Discord, ask questions in there. There's a lot of smart guys in there. And if you don't know something, feel free to just ask away. That's the only way we're gonna learn. Or you're probably gonna end up paying somebody to be your mentor, which is not wrong too, but you really want to get a good feel for the market before you just dump in some money, right? Don't think of it as a get rich scheme. Slowly build your base up and go. And that's really good that you're playing around with paper money. A lot of people don't like to paper trade, but I say if you can learn how to trade without having it cost you anything, that's the best way to go. Um, so for sure. All right. So let's go ahead and look at Apple. Apple, this is what I like to see, and we're starting to see it. So it's forming its support over 170. So as we see it form this support over 170, what I like to continue seeing it do is every time it approaches 170, I want to see it bounce, because that gives me a good idea of that continues to give me a good idea of how strong 170 is. And so this is the first time that we touch. If we see a second time, maybe it'll be a good area to get a position going at 170 or as close to 170 as possible. Usually this line right here, whenever we draw our support and resistance line, it's not really a line, it's a zone. So you're not gonna get a bounce right at the at the resistance line or the support line. They should go a little bit below, a little bit above, give or take a few dollars. So yeah, for sure. Don't sweat it. Just ask as much as you want. The only way we really or the only way I've learned was to just do things. And when I didn't know, it just trying to ask somebody who do know, or if nobody knows, then go to Google. Google is the best. But um, it helps. It helps when there is another person that you can talk to. So I'm making. That's why I'm making myself a source, so that uh, especially a lot of beginners, they get in to the market, they can ask questions. About I'm not the best yet, but I'm trying to get there. But I can, and in the meantime, I'll share what I know with you guys, and share what I have come up by my years of trading and trading, buying stocks, investing, or whatever you want to call it. How long have I been in the market? I've been in the market for 8, almost 9 years now. So it's quite a while. I know there's people that's been in the market longer than I have, but I think that's still consider, you know, that's still considered newbie level. Yeah, you got an idea of what when within the 10 years, and you got an idea of what you're gonna do and what to do, but you haven't seen enough time in the market yet. Um, and I'm saying that because the market likes to change from being bullish to bearish. Once every 10 years was the average, but we just been seeing such a long bull market that I have basically for all the time that I've been in the stock market, it's been a bull market, meaning you buy anything, basically anything in SPY, and it just continues going up. I've seen some pretty crazy markets, but I think I've seen probably like two crash, or what we to consider crashes, right? Flash crash, and then 2020. Um, so some pretty crazy times. Yeah. So I don't know if you are um you starting if you're just long only like I am. And long only means you're just waiting to buy stocks or options, and then every whenever the market gives you an opportunity. Because I don't like to try to take two sides of it because it gives me flip flop too much. I would say I'm a swing trader, so I'm in between swing and long term. But when the market presents itself, I can be basically be anything. I'm flexible. I don't want to really label myself, but most of my trading falls into swing trading and long term trading. Day trading, I do that a little bit here and there, but not enough to be consistent with it. I'll make some, you lose some, you win some. All right, so this is Apple, and as I was saying, I see it bouncing or holding the support at 170. This is the first real time test of it today. But I want to see it hold more. It's okay. It's gonna take a while for you to figure out what kind of trader you want to be. And what I would probably recommend you do, and what I did at the beginning was, there's a few places, like if you just search on Google, there's a few places where you can take a personality slash trading characteristic test. And what that allows you to do is, and you want to be really honest with all the answers, is it takes your personality and combine and basically tells you what kind of a trader you would uh at the moment, with your experience level, where you will fall into, right? If you're going to be a trend trader, if you're going to be a day trader, a swing trader, or what. And so, that'll give you a good idea. And so it doesn't mean that you're going to be stuck in that one style for a while, but all it really means is that what's going to happen is, it's going to give you a good place to start of what to learn, what stuff to learn and pay attention to. Then once you get comfortable with that, you're going to branch out. Because to be completely honest with you guys, the best traders I know, they're traders who are basically really flexible with the market, right? They're not just set in being a swing trader or long-term trader or day trader. If the market presents a opportunity for them to be a day trader, they are day traders. If a market is better for them to be a swing trader, they become swing traders. And if the market is better for them to be long-term traders, they do long-term. So the best traders I know, they're really flexible like that. But to completely to begin and just know what kind of trader you are, it that's the struggle. That's half the battle, right? And what your personality type will best fit with. So I would recommend just taking going on Google. You could probably find a personality trading test and take one of those. Right, they're most of them are free, and they'll give you a rough idea of what you can be, what you'll be good at, and then just learn from there. Right. Hmm. Yeah. If you're just beginning, feel free to take it very slow. Just stick with one style for a while. That's okay. But as you get more experience, maybe 2, 3 years into your journey, you can, play around with whatever, what the other styles and branch off into it. Or you could be like me. I've been trading for a long time, and I'm perfectly fine with just doing not day trading, but doing swings and doing long term because it it really fits my lifestyle. Right. So, also really ask your lifestyle because I know a lot of people that jump into the market, they still have a 9 to 5 like I do. And someone to become full-time traders, some, like me, I don't want to ever be full-time. I want to just have my portfolio and keep growing it. And then once it gets to a certain point, if I'm ready to retire, retire from work and just live off the profits. If not, I just continue working and keep growing my portfolio. But really ask yourself those kind of questions because that's one big part of becoming a successful trader is knowing what you want from the market. So you don't know what you want from the market, it's really hard to get it. So, just really ask that. I know a lot of people uh when I ask them this question, the only thing they tell me is I'm in the market to just make money. Oh, people make money everywhere. You can make money from your job. You can make money somewhere else, right? But really ask yourself what you want from the market. Are you in this to learn? Are you in this to are you in this to try to replace your day job? Are you in this to do something for retirement, or are you doing something for your kids? All of that dictates how you're going to trade too, right? So yeah, just looking at the hourly of Apple, we're jumping right back into Apple. Sorry about the going back and forth. I like having conversations with you guys too. So I'm going to be jumping back and forth between analyzing charts and also talking with people in the uh, comment session. It keeps this session really lively, and it's not the same thing over and over. So I really do enjoy it. So looking at the hourly, we notice, this is a pattern that's been showing up on Apple. You know, every time it gets to the 200 on the hourly, it likes to bounce off. So I think that could happen again, and it so happens that the 200, this yellow line on the hourly is very close to 170, right? So 170 right here. I want to see what it does. If it's gonna bounce off, right? Bounce off and goes towards 180 again, or if we're gonna see a break of this pattern, right? This pattern here. Just seeing how it behaved before. This is new, and as a trader, when we see a pattern like this, we like to play it because as the pattern develops more and more, it becomes really very strong. So this 200, and if we're a way to play this is if you were to get shares or calls or whatever, right? You want to set a stop somewhere right down here. So 170 would probably be good. Especially you're playing off the hourly. So you're playing off the hourly chart. Every candle here is an hour. You could set a stop somewhere right below here. 170. Give it some breathing room so that if price does go towards 170, you'll be okay. Or heck, you can go even lower at 180 or 168, right? Right below to give some room. you see here, and we're the thinking behind that kind of trade is that we've seen Apple bounce off the 200 before, right? We've seen it. This is one. No, not here yet, but one, two, three, right? Three times already. We're thinking that maybe it's gonna happen again, right? If the if history of Apple repeats itself, we could probably bounce off, right? So just looking at all the way from back here. Now before that, even before that, right? We've seen it violated here, but that's I think if you're looking at the hourly, the going too far back will probably be bad for you too, because this kind of price action from here is probably too uh too different from back here, right? So way back here. If you're gonna go back, 2-3 weeks, then I would recommend not looking at the hourly, because if you're looking 2-3 weeks back, it's better to just go off at the daily. The daily will probably give you a better idea of what's happening and what happened in the past for you to pay attention to. Right. So if we're going based off uh anything that's longer than 2 weeks back, I would recommend 2, maybe 3 weeks. But 3 weeks would be pushing it. I would recommend just if you're going back further than 3 weeks, probably just go and look at the daily. But the just looking at the hourly, that could happen again, right? It bounced off the 200. Right? And we would never know for sure what's gonna happen. It's never a given that it's gonna bounce off this 200 moving average, but we have some evidence in the past here, right? Within the past 2 weeks, that it has bounced off the 200, so we can take a place of bet, right? And that's all we do when we trade is we look at the evidence, right, and place a bet. Well, what is likely to happen, right? So if we get shares and we think that's going to go to upside, and then we set our stop, right? It's important because our stop is basically where we're drawing the line, where we're saying, hey, um, this move is wrong. My analysis was wrong, and I'm admitting that I'm wrong, right? When you become a trader, you have to be a very good loser, because if you're stubborn, you could end up losing everything, right? And especially if you do big trades, you don't want to lose everything. You want to have calculated risk, right? Apple still looks very good, looks very strong. It's actually one of the laggers. Um, even though it was climbing, it didn't climb as sharply as the other tech stocks. So we're right now we're seeing it start to climb again, right? So you see something as sharp as this, but this, it was just kind of slow this year, and then boom. So we're thinking that this is the start of that true breakout. Maybe it can go even up to like 200, maybe 220 easily. But I'd rather I'd rather see it slowly climb up to 200, 210, and 220. Right. So that's probably we'll probably see that in 2022. Probably very easy, right? Easily get to 2020, right? 220, 2022. If it just slowly goes up. Now, if it has a huge explosion, we'll probably see it higher. But at the moment, I think 2022, you could probably see Apple and the 200, 220s, maybe 230, but I think 220 will be more healthy move, right? So given that we're close to the end of the year, where I would say we're at 170. So oh my God, um 220, right? Minus 70. About a 30% gain for Apple, which is a very reasonable rate of return. 30% in a year for a given stock is, a great return. So, uh, I say for Apple, by before the end of 2022, we're probably going to see it touch 220 once, right? And that's a reasonable rate of growth, right? So it's 30%. That's my prediction on Apple this year. It's still moving pretty. It's a pretty good trend to the upside. I don't see anything that I'm too concerned about. Right? Look how crazy it went. Right? Apple's been so we see all these drops like clockwork. So I don't know if we're gonna see that in 2022. If we do, that might be good too. If we do see a drop, we probably won't see it at 220. But that just means that we get a chance to pick it up even cheaper, right? So if we predicted a fall in 2022, predict a fall in 2022, I would probably project that it falls maybe to around this level right here. It's about 115, right? So 115, let's take a look to see how much of a drop that is. Right? So it's 170 right now. That's 115. About 30% drop too. 30% drop, which, you know, that's around the same size uh, as you would expect from a correction, right? A correction's about 15 to 20% retracement. 30 might be a little bit aggressive. So, you know, that's what I'm thinking. So if not, we could probably see it at 120, right? So closer to what a 20% correction would be like. That'd be a great pickup on for Apple. So if we don't have a correction in 2022 and Apple keeps going, before the end of the year, we'll probably touch 220. But if we do have a correction, probably see Apple all the way back to the 115, 115, 120 level. So right around here, right? This level, this support level here is a big one. And this is why I leave the old support and resistance levels here. Gives me a good idea of what to look at in the future if it ever retrace. So that's Apple. MB. MB has been decline. Then this is the bounce, right? If we're playing off of just the 50 moving average on the daily, I would have played this bounce, right? Set a stop down here, right below this swing low right here, right? Set a stop at 128. Try to catch it to the upside. But what I'm noticing in the support roll, right? Support and resistance level, I think it might be playing in this range. I want to see what it does, and it approaches 150 again, right? So 150. Yesterday we got pretty close, right? We got pretty close. Today we open higher here, and then we drop, right? So the good thing is when we drop today, we're still within this range. So I think we could be playing this range for a while. So no highs for the end of the year. For me, because I'm a slower trader, uh, more swing and long term. I check the charts maybe. I'm always looking at the chart throughout the day, but to really plan out my trades, I like to plan the night before, or a few days before. And since I'm paying attention to the daily, the weekly, and the monthly, that gives me time to really see which plays will happen, right? Uh, and in my head, it's never just one thing that could happen, and hopefully I'm making this point across as I'm doing these sessions, but it's never a given of what it's going to happen. So I like to look at the possibilities of where the chart could go. So I give myself a number of trades, right? A number of possible trades that I can take. So I go number one, what do I think? Trade number one, I think it's gonna bounce off here. So that's one trade that I could take. And if I see price start to move in that direction, I'll take that trade. I'll look at uh I'll look at a different trade, or a different time chart, maybe like an hourly, right? And I'll say, "Oh, this is what's happening on the hourly. Let me so trade number two, if it goes the opposite way, I can continue to wait for it, and at the bottom here or something, I can pick it up there, right? Or I can even play on it even longer, right? Even longer, and I say, based off the weekly, what's happening here, if I see a drop down to this level, I'll get it. So I have a number of trades in my head, or a number of outcomes that I'm waiting for. And whenever each one of them hits, or the conditions for each one of them hits, I try to take those. So it's never just one thing that could happen. So I come up with a few different scenarios in my head. Sometimes I write it down. Uh, Actually, in my younger days, I actually wrote it down more and try to see which one played out. So hopefully that gives you um, insight. Or if it doesn't make sense to you, feel free to let me know and I can elaborate more on it. Um, don't worry about it. You're just beginning, so it's gonna be pretty crazy for you. But it's like just learning anything new, right? I would recommend I would recommend what you do is just have a set of steps that you look at, you do. Um and for every chart, I keep my analysis really simple. I know I do a lot of drawings, but some of these drawings, they've been on here for a number of months. So even though it looks pretty crazy, the two things that I truly pay attention to, it's just if this 50 moving average, which is this purple line, and this 200 moving average. So it's very basic, right? There's no complexity. There's nothing too complex about what I use to trade. I use this 50 moving average and this 200. And all that I'm really looking for when I look at charts or price charts is that how close it is to the 50 or the 200, and if the 50 is above or below the 200. That's it. And you know, another level from there, then I look to see what price has done when it approaches these lines, right? The 50, which is just purple, and then the yellow, which is 200. So the 50 and the 200, before using any technicals, you have to know what they measure, right? So the 50 average, to how it's generated, is it takes literally today's price, or it takes yesterday's price, and basically the 50 candles that came before it to try to generate, and it takes the average of that and it generates, where this point is. And it just basically does that for every candle. So that's how you see this line. And then the 200 is basically the same thing, but with instead of with 50, the 50 past days, it's with the 200 past days. And so it's an understanding that when we see price above the 50 moving average, that that stock is trending up, or the price is more likely to go continue up. Um, and when we see price above the 200, this yellow line, it's a bullish market. So that's the understanding of it. And when we see the 50 moving average above the 200 moving average, that means the price is very likely to go to the upside and continue going to the upside. So that's my understanding of it and what I've been using it as. So these two lines is just, for better or worse, just to help me indicate what kind of market environment it is. If price is gonna be more likely to go to the upside as time goes on, or if price is gonna be more likely to go down as time goes on. And so, if I see it moving up like this, right, it gives me a very good indication that price is likely to continue going higher as time passes. So I look at that, right? And you can see it's pretty true, right? You look at as far back as 5 years, right? We have times that price like this, that price does break it, and that's out of character. But we see that, given if you have time and you wait on it with time, you know, when the two technicals are like this, it's very likely that price will continue going higher. So, you see here, yeah, it did go below, price did go below the 50 and the 200 here, but the technicals did not cross. And given time, you can see it continue to make highs. Right? It continues to go higher, make highs. So that's one thing that I pay attention to. Oh no, feel free to ask as many questions as possible or as you would like. I host these sessions to analyze stocks for myself, for you guys, and to show you guys how I analyze it, and also so that anybody who needs help or wants to ask question can come on and ask questions. So more questions the merrier. Ask away. Right, so this AMD, I think AMD is doing pretty good. They bounce from here. Maybe if it continues to hold about the 50-day moving average, it'll continue bouncing higher. We dive down to the hourly. The hourly still doesn't look so good, but I'm seeing what looks like it could be a change. Um, but I have to really see what happens. Right, we can see maybe this is just a shakeup here, and if it comes back into goes back up and it forms long uh another long trend to the upside again, would be nice. Yeah, so we can see here, right? We have periods of time where the 50 on the hourly was below the 200, but then shakeups here, and then new trend starts. I do not trade live. I try to go on Discord, but there's just not much for me to really show, because when I trade, because I'm a longer term trader, a lot of my positions are really long term. So, or multiple days at a time. So you might see the beginning of it, but you might not see the end of it, or you might see the end of it, might not see the beginning of it. But on my YouTube channel, there is I made a a playlist. If you go and look at the playlist that says random walk on demand, that is basically using this platform and using the on demand feature and showing exactly how I would take a trade, and it's using past data, but it's with random stocks and random stocks that I've never traded before and doing the exact same thing. And in those videos, I think through what I'm doing and I'm talking through every single trade that I'm taking, and but it's with a paper. So feel free to uh feel free to look at that. My channel. Give me a second. Let me find the link for you. Hopefully you can see. So I can also show you on the screen, right? So this is my channel. This is my channel. So if you go to playlist here, these videos, and I'm planning on making more, but these videos here, they basically show everything that I would do in a normal trade, and gives me, in the description gives you a breakthrough of what I do, and I try to show you, or basically anybody, exactly what the kind of things that I'm thinking of and how I'm thinking about each trade and what I'm doing, and um I'm stepping it through, a few days at a time, and then when that trade is doing good, I step it through a few weeks at a time. So you get to see my trading style and what I do on a normal basis in those videos. Um, so hopefully that helps you. For sure, if you aren't a subscriber, just feel free to subscribe to it. And a lot of all of my sessions that I do here is also recorded onto my YouTube channel. Um, so feel free to explore that. I want to provide you guys with more videos on how to do it, especially since you're a beginner. I cater more towards the beginners so that I can get them a good foot in the door, so they're doing most of the right things, and know where to really begin, right? Because I don't see too many people out there. Um, I don't see too many people out there giving somebody a package or showing them exactly what to do. Right. Most of the time, they're piecemealing it, and so I'm just hoping that I'm giving you guys enough, and I really want to see everybody succeed. So follow that. Right, so that's AMD doing well. We see some downfall today, but I think hi. Today's killer, and man, we've been talking about this. I want to, and that it's going to come back to this 900 level, bounce, basically just be continue to bounce in between this range, from 900 to 1,000. And, this is still proving it. What we've seen this week has been proving that's what price has been doing. Bouncing in between this range, this 900 and 1,000. I think we're going to be there, probably going to be there until maybe the end of March. If we look at this, right? This is basically a repeat. So this right here is a repeat of last year and the beginning of this year, right? So last year when we had a huge run up, right, and then sold off, and then it range bound. It range bound for the better part of this year, right? It wasn't really until March, not March, but June, July, that we really started to uptrend again, right? So when we see these heavy gains right here, it's usually followed by a long period of time where we don't really make any new highs, and we continue just range bound. You know, what we want to really pay attention to is where the we see support at, right? So for here, an example of what has happened in Tesla, uh, an example of what has happened in Tesla. Oh, no problem. Thank you for coming on. And I hope to see you more on here. Feel free to ask any questions or reach out to me. Thank you for following along. Right. So going back to Tesla. So Tesla, this is what we should be paying attention to. So this is what happened last year. Right. And as I went down, we want to see it form a support level. Right. So we can see the true bottom here, and it was tested. Right. True bottom zone here. Tested one, two, three times. Right. Then it stayed here for a while before it took off again. So we're gonna see that. We're gonna see that more and more. And this is the start of it, right? A lot of red, a lot of heavy drops, a lot of heavy drops that we're seeing, and then we're gonna see a slowdown in price, right? Like around here, you see how we have weeks where price just didn't really do much, right? And and that's really relative to Tesla, because price not doing much to Tesla is still like a range of like 20-30 dollars, right? That's basically not really doing much. So we're gonna see, right now we're still seeing these huge bars where we're seeing like close to $100 drops every day. I want to see where it starts to slow down, right? Maybe we start slowing down and seeing like only a daily range of maybe $50. Then it goes down to 40, 30, 20, right? I want to see this. So maybe we're establishing a support here. And right now, I'm just really guessing at where that support is going to be, because and why this is such a good level for me to guess where a support is this was previous high, right? Last year's previous high. And we broke out of that, right, in November. So that's why I'm using that as support. And I'm really paying attention to see what it does here. I think it's going to bounce in this range between uh, 900 and 1,000 for a while. I don't know if this is gonna be end, because if it is, then that'd be great. But if not, I think we can go all the way down to the 200 moving average, which is around 800 here. We'll probably bounce in this range, all right? And if we follow suit of what happened this year, 2021, we see price going all the way up to like May or June before we continue upwards to make a new high or to retest the all-time high of 1243, 1244. Right? So far, and for all those who've been following my analysis, so far my analysis has been pretty spot on. It's been touching the levels, given that it doesn't happen right away, right? But when I say we look at a certain level, it usually comes to that level, right? It holds that level. As I said, eventually we're gonna come back to this 900 to look for that 900 touch. We're getting pretty damn close to 900, but I'm not completely sure what Tesla wants to do when it comes to 900. Right? Well, feeling that gap. If it was up to me and thinking, I think we might bounce from 900. Right? I want to see a I want to see if 1,000 will be a resistance, or if 1,100 will be a resistance, right? And where that range will be. Because if that range is between 900 and 1,100, that's a $200 range. It's a very, even though we're not making new highs for next year, 2022, and going into 2023, that gives us a $200 range for us to play in, right? So maybe we spend a few, we spend some time going down to 900, and then a few weeks or months going back to 1,100, and then back to 900, right? We just do that all the way until 2023. that gives us a $200 range to play with. Now, that could be, and so that's why I'm paying close attention to where support is. So this 900 is where I'm keeping my eye at because we know where a resistance is, right? Right, our first line of resistance here at 1100. So, and we just want to see it test multiple times, right? And going back, and that leads us to Amazon, right? Know, two stocks aren't related, but this is the kind of pattern that I want to see, right? The huge range that Amazon is doing that I think that could happen in Tesla, right? So see, you know, basically Amazon's been spending the whole year within this range, right? Between 3,000 or 3,000, 50, pretty much 30, 50, and 3,500, right? So that's a $500 range. But Amazon's a way bigger stock than Tesla. And we see it in this range, right? So Tesla, I think it could be a $200 range in between here. And I think it could do this for the rest of the year. So if that is the case, and we catch that, we you know we catch on to that behavior, we can totally make it into our we can make it into our play that we can continue to profit off of, right? The behavior that we're noticing, right? So, you know, relating the two, Amazon and Tesla, and just the price action, if we see that behavior happening in Tesla, what we want to do is we never really want to short it because we know how powerful Tesla is to the upside. So I will only just take it. I see a support. If I see a support, like right here, every time I see it come down to this support level, maybe I'll wait until to see how much lower I can go. But when it seems like it touches bottom, right, like down here, I will get some shares. Add some shares to my long portfolio if I have I have the need for shares. If not, maybe I get a contract that's maybe 2 3 months out. Just knowing that it'll run back up to the resistance and test it. Right. Then as it gets closer to the resistance, I'll exit and then wait for it again. And I'll just keep doing that. Right? That might not give you home runs, right? But it gives you good returns. Even 30, 40% on a contract, right? On a call contract is pretty decent money. You don't need to hit 100 percenters every time to be profitable in the market. Just need something that's consistent. So I think that's something that could be happening for Tesla as it as we move on throughout the year. Okay? See that kind of behavior from where it's staying inside this range, maybe a $200 range in here. So hopefully I am right. And we can come back to this video maybe 6 months from now, or we continue to monitor week by week to see, because this is something that I monitor week by week too, this whole year. And this, I've only drawn this once. I haven't changed it since. So, and I've been taking full advantage of Amazon this whole year. Every time that it got close to down here, get some credit spreads. And it just kept going. It is struggling a little bit right here. And it looks like the trend right here, just the trend here. I'm just waiting for that break. It's been itching to break, but it hasn't yet. I'm just waiting for that break. Okay. So before we end this, I want to take a look at our cheaper alternatives to those big plays. I know I like to look at blue chips first, but let's not forget that there's also cheaper, smaller cap stuff that we can also play. The SoFi for sure, has some rumblings and it's still holding some support here, right? I like to use this support here, but we can see, as I mentioned before, support is a zone. So we've seen price in here too. You can even say that this range right here is this support zone. So from 16 to about 14, the support zone right here, and it's been holding this zone. I think just giving it some time, it'll probably come back here, but it probably won't be until maybe March, April, or even April of next year, right? So you can see it likes to form this kind of behavior. When it comes down to support, it likes to stay there for a few months. Okay, so a few months from here, we're seeing something in maybe April, maybe May, very earliest March. But I believe we're probably gonna stay down in this level until maybe April. Right. So April, SoFi, right, looking good. Definitely a stock that has potential, right? Potential for explosion. Something to pay attention to. NIO. NIO, we're seeing a breakdown below here. This is you know, kind of expected. I thought it was gonna hold, and it still looked like it could hold, right here, because we've seen it down below here, but it's looking pretty weak. But if you're a firm believer in EV and also in NIO, you know, I would be looking this the bright side of this move to the downside is that you get to pick it up cheaper, right? Especially if you missed that run, right? The run up in 2020, it went from like $4 all the way up to $66. You missed that run. Wait for it to come back down. Maybe you catch it down at 23. If you're lucky, maybe you catch it down at $10 again. Right? Stock has potential. People have their eyes on it. Even though it's just going to sleep for the winter, right? The stock winter here doesn't mean it's dead. Right. And if you sleep on it, you might miss it one day. So don't sleep on it. Always keep an eye out and just have a plan ready in place. Uh, SQ is still holding on to that support level pretty good. Now SQ is a lot more drawn out. So we see this like better part of a year. So I don't think we're gonna have another run until maybe September of next year, if we're being completely honest. At the earliest, maybe August, end of July, August. Right? Really long drawn out. But this is a pretty new stock, so it's gotta be very patient with it. It's not gonna run like it's not gonna run like a blue chip. A blue chip has had many years before they caught steam. So this is just a stock that came out like a year and a half ago. So we gotta, yeah, I don't think a stock that IPO recently like that would very, very few of them, catch steam and continue with it. So if we're looking at something like this, like QS, I think by like 2025, if it's doing well and it's hanging in there, 2025 is probably when they'll catch some slack and it'll probably take off and then it never returns to these price levels again. So we're looking at something that's like 4 or 5 years out. It's gonna really test your patience with it. Since lower, cheaper stocks. Same PLTR. PLTR, it's probably gonna do the same thing, right? We see it slacking coming down here, but it's not gonna probably do anything for the next 4 or 5 years. And if anything, it'll just give you a lot of time to build your portfolio with, or your position with. But 5 years from now, right? It gives you a lot of time to build a position. You can catch yourself get with 100 shares. or you can slowly build that 1,000 share position. It gives you, you get to see it. So I hope you guys are not sleeping on these smaller positions. 'Cause, right now they're offering a very good discount. A lot of people might just say, "Oh, I'll catch it later," or "I don't have the cash now." Charge point, EV. Right. As we're be going into more of a electric vehicle world, we're seeing electric vehicle popping up every here and there. Charging stations are going to be needed more and more as time goes on, and we're probably going to see this catch on. Right. So I'll end it here with charge point. This is definitely this session is a lot more active when we have people asking questions, and I do encourage it. If you don't understand something, or if you need me to help look at something, or even if you just have questions or just want to chat, feel free to leave your comments in there. I'll see them and we can talk. We don't just have to look at charts and everything, right? You can ask questions about risk management, or or how can I, or ask me to go into details of risk management, or details of um, money management, right? All things that are really crucial to trading. So with that, I'll end it here. And next week I'm on vacation, but I'll see if I can host some of these sessions. If not, this might be my last one for the year. So it's been a wonderful year, and I hope to continue doing this into next year. I for sure I had a break in the summertime because there wasn't much that was going on in the summertime, and each week is more or less the same thing. So I took a break in the summertime, but hopefully next year I continue and we grow this, and I continue to provide more usefulness for you guys, because I'm really doing these sessions. Um, yes, one, it's for me, so I give my time to do homework on stocks that I'm looking at, interested in, or just potential positions. But also, I'm doing this to try to help you guys. So wherever I can provide help, assistance, or value, feel free to let me know. Or even if you have pointers of how I can improve, feel free to share that. With that, thank you, everybody. Continue to have a profitable year. If you are having a profitable year, stay safe. Have a Merry Christmas and Happy New Year. Thank you, everybody. Signing out.